Here we are the week of March 10th. We're heading into the fourth quarter of the current earnings season. The next earnings season doesn't start for about 3 to 4 weeks, but we got stocks and a lot of stocks focusing on technology and retail declaring this week. I'll talk about some of the names here in just a moment, but what you want to do is stick around for the trade from last week because it's what I call a home run trade. You're going to find out what we did with that trade and also our upcoming trade for this week's. So stick with us. Here we go. All right, each and every week we talk about earnings. So down at the bottom, you'll have a chapter feature to hop to a stock of your choice to hear what we say about it. We give just a short little description of the stock and what it's going to do, what it's expected to do, and probably the strategy that we would deploy on it. So here's our list of stocks for this week. What we do is we have the breakout candidates. The stocks are going to break out possibly more than 10%, so double digits on the left. And then we have those that are quiet. Quiet stocks are on the right. These are going to be stocks that either consolidate or move single digits. And this is, in our opinion, this is what the market thinks. All right, this is where option pricing is being priced at. These are where the options are being priced at, combined with the historical move of the stock. So let's begin. Let's talk about some of these quiet stocks first. All right, let me give you an example here. So we have Pfizer. Pfizer is a notorious quiet stock through earnings. On average, it moves about 4%. So here on this chart, I have the earnings dates identified with the vertical line, the vertical red line, and then the ellipses on the earnings dates. And even when the stock gaps a little bit, it's only gapping like 2 to 3%. It's not really moving. You can see the stock has been consolidating between $24 and $31 for over a year. So this is what we call a quiet stock. It's only moving single digits, right? So let's take a look at our list for this week of some quiet potential candidates. Now, this is not all inclusive. What I do is zero down into those stocks that are really like there's over 500 companies declaring earnings this week. I'm focused on about 36 of them. All right, that's because of their option volume, their historical movements in the past. So I really focus on the quality candidates. And as we begin here, we'll talk about some of these quiet candidates. Let's begin with Vail Resorts. Okay, MTN for Mountain. That is the stock symbol for Vail. And Vail is a company that a lot of people don't know. They own over 40. It's not just Vail Mountain in Colorado. They own over 40 resorts around all over the place. Okay. Beaver Creek, Keystone, etc. Just the list is endless. You can just go to their website and figure out everything they own. But you can see here, Vail has really been beaten up here. It's really lost market value, trading at $154 right now. But that's not what we're concerned about. What we're concerned about is the actual earnings announcement that comes later today for Vail. Okay. So it declares today after market close. We're expecting a little less than a 7% move for Vail. Now you can see that today it's down 2%. That's not the earnings event. Okay. The earnings event comes tonight. We expect only about 3 to 4, maybe 5% move for Vail, unless there is something big that they announce. But all I know is it's incredibly expensive now to go skiing, and I find it very interesting that they're selling off. The stock is selling off so much because still a lot of people love to ski, and I know there's a lot of money being spent on lift tickets, but man, they are pricey these days. All right, so the next stock that we're going to look at is Casey. This is a family of convenience stores or convenient/restaurant stores, Casey's, and they have a historical move and an expected move right now of plus or minus 5%. Now, this is interesting. This is a $385 stock, and you can see that it's had a pretty good run. All right, it's been on a good trajectory, moving up, and right now the option pricing is coming in at right around 5%. So we don't expect a big move, even though Casey's is down 3.26 today. It will declare tomorrow, March 11th, after market close, and again, single digits for Casey's. Now, believe it or not, there is a stock that is up today, and that is Dollar General. All right. So in the face of higher inflation and rumors of really of costs going up and the market just selling off, well, you would expect a stock like maybe Dollar General to get a bid, meaning push the stock higher. It's up by 1.43% today. But what we're focused on is the earnings event. They have earnings on Thursday, March 13th, before market open. Sorry, BMP should be BMO, before market open. And the expected move here is, and what's being priced in is 8%. All right. So 8%, single digit move for Dollar General. This used to be a big mover and something that we used to love to trade. Now, for these quiet stocks, we trade things like iron condors, and other strategies where we sell premium. Okay. So as we transition into our breakout stocks, if you like what you're seeing here and our discussion of how to make money around earnings, please give us a like and subscribe to our channel. This helps us reach other traders out there. We talk about these earnings events every week. Believe it or not, there's not a off season for earnings. There are earnings every week, week after week after week. So, and we talk about it right here, the biggest movers and the most quiet stocks with the biggest option volume. That's where we're focused, okay? So let's get to our breakout stocks. I want to show you an example of a great breakout stock, and that's Akamai. All right. AKAM, this stock is does not have earnings this week. This is just an example. You can see every earnings announcement that this stock has a breakout. Huge moves. Look at the most recent earnings event. It was a breakout. The stock break just fell apart, and we had a very nice trade for our subscribers on Akamai going into that event. Nice consolidation at $100, and we put on a straddle or a strangle, one of those two strategies, because on these big movers, we like to trade straddles and strangles right at that $100 mark. And then you can see the stock close down the next day at $78. All right. So a big move there. That's what we're expecting from some of these stocks that you're going to see now. Let's begin with a stock that will have earnings later today. This is going to be Oracle. They declared today, Monday, March 10th, after market close. The expected move here is greater than 3%. Stock is moving almost 5% right now. This is historically a big mover. It'll even gap around without earnings. Okay, you can see the big movements in the stock, $150 stock, and this thing typically is a mover. Sometimes it will consolidate, but right now it's in the news so much that we expect some big moves from more Oracle. Well, the market is expecting big double-digit moves from Oracle. Another one is Dix. All right. So, I did not update my wording here. So let me just delete that so we don't get confused. But Dix has earnings on. Let me just get the correct date there. I will update that. I can tell you the estimated move here is 10%, and they declare tomorrow, Tuesday morning. Okay. March 12th or 11th. Sorry, March 11th, before market open, we hear from Dix. They have an estimated move greater than 10%, and they typically do move through earnings, often around then. Now, this is a $210 stock. So with stocks like this, the straddles and strangles usually are a little bit more expensive. But let's talk about one that isn't so expensive. All right. And that is Groupon. Believe it or not, Groupon is still around. Having a big day, though, down 6.74%. But Groupon and my little call out did not translate here either. My goodness. So let me tell you, they have earnings on Tuesday, March 11th, after market close. Okay. So they will declare after market close on Tuesday. And the estimated move for Groupon is greater than 10%. Okay, so same as Dix, Groupon is greater than 10%. Now, one that did not make our list this week, but I still wanted to talk about was Kohl's. All right, because this is typically a very consistent winner for our breakout service. They have earnings tomorrow before market open. That's March 11th. The expected move here is greater than 15%. So this is a $12 stock. Normally, you're going to get your straddles and strangles to cost around $2 to maybe $3 at most. It usually, I like to get it as close to 10% of the stock price as possible. But normally, for these historic movers like Kohl's, I would not doubt that the straddle or strangle on Kohl's is probably going to be about $2.50, maybe even $3. Okay, but it's typically a big mover. It will move greater than 15% through earnings. So we'll know tomorrow morning, won't we? It has earnings pretty quick. Now, moving on later in the week, we have another stock that is in the news and a lot of focus on this stock. This is Adobe. All right. They have earnings on Wednesday, March 12th, after market close. The expected move here is greater than 14%. Now, Adobe, here's the thing with Adobe. This is a big boy trade. All right. This is a $437 stock. You can see here the stock is currently trading at $437.53. And actually, that's where my snapshot was taken. So 437.93 is the current offer on the trade, and we expect a big move. Now, straddles and strangles on here will cost you, a strangle will cost you around $3,500. So this is really only appropriate for companies that have, or excuse me, traders that have accounts $75,000 or more. All right. $75,000 or more. If you have a smaller account, say $10,000, $15,000, $20,000, avoid Adobe. It's just too expensive. Okay. But something like Kohl's or Groupon that we just talked about, that's more in those smaller account wheelhouses. Two more to go here. We have DocuSign coming up on Thursday, March 13th. The expected move here is greater than 10%. DocuSign, again, another good, consistent historical mover. If we can get our straddle or strangle priced down around that $7 mark, this would be a good trade. Again, around 10% of the current stock price is where we like to find these, and expecting a big move from DocuSign. And finally, Ulta, another consistent winner. However, this is a $350 stock. This is also going to be another expensive straddle or strangle, but we're expecting a move greater than 10%. And you can see here, look at this. This stock hit $450 back in earlier this year in January, and it's $350 now. Okay, so just literally in 6 weeks, this stock lost $100 in value. But look at this; it's been down here before and went from about 338 to 428 in about 3 weeks. So this stock is a mover. It always has been. And around earnings, we expect double-digit moves. So be sure when you structure these to set up your trade to where you have plenty of time after the earnings event to be right. In other words, this stock has earnings on Thursday. I would go at least out 1 week to the using the March 21st options. Avoid March 14th. I would do expiration. I would do the 21st or even further. That's going to increase your cost, but it's going to give you more time to be right in the trade. All right, so let's summarize once again. Let's take a look at our list, and we'll move on to last week's trade and then a new trade for this week. So you can see here, again, this is not all inclusive, but I'm focused on the biggest movers and the quietest of stocks and those with most option, open interest, and option volume. That's how they make our list each and every week. For example, there's a handful of stocks declaring Friday, but they're not qualified for our lists. All right. So we don't even worry about them. All right. So what do we do last week? Well, we did a trade on Marvell technology. All right. And this stock was a nice little setup. This was a strangle. Okay. So we expected a big move on Marvell. Okay. Or Marvell Technologies. And you can see here with the flat bottom on the risk graph, The black line is where I'm focused. All right. The flat bottom there indicates that it is a strangle. And this did cost us. If you look down at the very bottom, you'll see the debit or and the potential loss. It was a little over $1,000. That was our debit in the trade, just right a little over $1,000. And then really the stock could go up or down and we can make money. We just don't want it to go sideways. So we don't want to do a straddle or strangle on a quiet stock. We want to do them on these potential breakout stocks. So how did Marvell do? Okay. Well, this was what we consider a home run trade. In just 1 week, we doubled our money in the trade, a over 100% return for Marvell Technologies in 7 days. This is where it was earlier this morning. I would imagine it might still be even lower than this right now, which means even more profit. But when I took this snapshot just about 1 hour ago, we saw that the profit, because earnings were last week, we made a nice little profit of around $500 right after earnings. Okay. But by staying in the trade, okay, stock looked weak, market looked weak. Let's stick with it. We have time to be right. And look where this thing is currently trading, down over down over 8% today, over $5, almost $6. And our profit in the trade is currently $1,263. That's a 120% return in just 7 days. Anytime we get those triple digit numbers, that is a home run trade, because these are really short term, really short trades. And we like to do them always right around earnings. All right. So that is the potential here on these. Last week, our trade, I believe on Dell only, it made 8%. Okay. And this week, Marvell really did us right. And we got 120% return in just 7 days. All right. So what are we doing this week? Well, believe it or not, this is a company that I'm always surprised is still around. Okay. I have not heard of this company in a while, but it always appears right around earnings. Our trade for this week is on Groupon. Okay. Believe it or not, Groupon is still around. And we're going to do a strangle on this. And as I mentioned, this is a very affordable trade. The debit in this trade is going to be around $170, $180. Okay. And per strangle. So it's very affordable. A smaller account, like a $10,000 account, can do this, and not, you're not risking, very much money at all. And a strangle, what I did here was the $10 puts and the 1050 calls, just to be specific. $10 puts, 1050 calls. That would be a strangle, even though it's only 50 cents apart. And I'm looking for a big breakout on Groupon for it to move double digits. Okay. And what we were talking about there on double digits on Groupon was a little over 14%, I believe, is the number that we were talking about. Actually, I've mentioned 10%. So I think where option pricing is going, implied volatility is increasing. All right. So we could see a bigger move than 10%. And that is why we are doing a strangle on Groupon this week. So everybody, that is it. That's a wrap for this week. Earnings, again, the numbers are going down, but the quality candidates are there for our subscribers that subscribe to Delta Neutral Breakout, which is the publication where we focus on straddles and strangles. Man, we did 4 trades already today. All right. We have put on 4 trades today. So we've been very busy, a very busy Monday. We have a free guide for you on these straddles and strangles. It's available here at ewotrader.com/straddle. So be sure to go there, download it, take a look. And if you have any questions, you can always contact the support links that are in that document, and we would be happy to hear from you. So everyone, have a great trading week. Lots of info coming with earnings events, and they continue on for the next. They never end. Like I said before, they never end. Earnings never end. So I'll talk to you next week. Take care.